Welcome friends to the next lecture of Organization of Commerce and Management subject. I am Mrs. Neeta Iwale. We are studying fourth chapter, that is Business Services. Till now we understood meaning, definition and features of business service. We discussed the first business service too, and that is banking. Now we knew that what is banking. In last lecture, we studied three types of banks. Which are those? Now, the first type we understood central bank, second one commercial bank, and third one cooperative banks. We also understood types of commercial banks, that is public sector banks, private sector banks, and foreign banks. We also studied types of cooperative banks, that is primary credit societies, district central cooperative bank, and state cooperative bank. Right? Now today we will study remaining types of banks. Now see, the fourth type of bank is Industrial Development Bank. Industrial Financial Corporation of India, that is IFCI, right? IFCI was first development bank of India, established on 1st July 1948. These are financial institutions that provide medium and long-term funds to the business firms. Now see, examples of development banks are Industrial Finance Corporation of India, that is IFCI, State Finance Corporation, that is SFC, and Maharashtra State Finance Corporation, MSFC, etc. Now we will see some functions of development banks. Provision of medium and long-term funds to business units for the purpose of expansion and modernization. Underwriting of shares of issues by public limited companies. You know what is underwriting of shares in SP. We have studied it. Purchase of debentures and bonds. Right? So see the next bank, that is fifth, exchange banks. The exchange banks encourage the flow of foreign investment into India. That is important for economy. The exchange banks help in providing Indian corporations and government agencies access to international capital markets. The exchange banks as well as large commercial banks facilitates foreign exchange transactions. If we want to see the examples are Bank of Tokyo. The number of exchange banks, better known as foreign banks, operating in India at present is 36. The exchange bank finance and internal trade of country. They finance the movement of goods from one commercial center to another. The exchange banks also facilitate the financing of imports. The exchange bank facilitate the payment of goods exported. That is also important for import and export. Now let's see some functions of exchange bank. Financing foreign trade transactions. Issue of letter of credit. In last standard we have studied international business, and in that you know what is issue of letter of credit. Discounting of bills of exchange. This is also one of the topic in bookkeeping and accountancy subject, right? Then remittances of dividend, interest and profits, etc. Now see the next bank, that is Regional Rural Bank, popularly known as RRB. These are unique type of commercial banks that lend to agriculture and the rural economy at a reduced rate. That means reduced rate of interest. RRBs were founded in 1975, don't forget that year, and are governed by the 1976 Regional Rural Bank Act, right? The capital of RRB is contributed by central government 50%, state government 15%, and sponsored banks 35%. Between 1987 and 2005, 196 RRBs were established. From 2005 forward, the government began merging RRBs, bringing the total number of RRBs to 82. These banks are sponsored by large public sector banks. RRBs mobilize deposits primarily from rural and semi-urban areas and provide loans and advances mostly to the small and marginal farmers, agricultural laborers, and rural artisans. Got it? Now see the seventh type of bank, that is saving bank. Savings bank, financial institutions that gathered saving, paying interest or dividend to savers. It channels the savings of individuals who wish to consume less than their incomes to borrow who wish to spend more. Except for the commercial banks, these institutions do not accept demand deposits. Okay, don't forget that. They do not accept demand deposits. Commercial banks are intermediary between the central bank and the ultimate money borrowers. However, saving banks are financial institutions whose primary purpose is to consist of accepting saving deposits and paying interest on those deposits. The main objective of saving bank is to encourage saving of the people, especially in rural areas. Example of such bank include postal saving banks, commercial banks, and cooperative banks. See the next type of bank, that is investment bank. Investment banks are best known for their work as intermediary between a corporation and the financial markets. Okay. These banks provide financial and advisory assistance to their customers. That is, they help corporations issue shares of stock in an IPO, okay, or an additional stock offering. Investment banks facilitate merging and acquisitions by undertaking research and providing advice on investment decisions. They also arrange debt financing for corporations by finding large-scale investors for corporate bonds. Their clients generally includes business firms and government organizations. Generally, investment banks do not directly deal with general public. This is important for objective questions. Okay. Now let's see some specialized bank. These banks cater to the requirements and provide overall support for setting up business in specific areas. Okay, let's see one by one. The first one is given here is Export and Import Bank, popularly known as Exim Bank. Exim Bank stands for Export and Import Bank. Exim Bank is fully owned by Government of India. The main function of the Export and Import Bank of India is to provide financial and other assistance to importers and exporters of the country. And it oversees and coordinates the working of other institutions that work in the import-export sector. This bank provides financial assistance to exporters and importers and functions as the principal financial institution for coordinating the working of institutions engaged in financial engaged in financing export and import of goods and services with a view to promoting the country's international trade. You know its importance in economy, right? This type of bank can provide loans or other financial help to foreign countries that are exporting and importing goods. Okay, so this is the first specialized bank. Now see the second one. The name of it is Small Industries Development Bank of India, that is SIDBI. This bank can provide a loan for a small scale enterprise or business. With the support of this bank, small businesses can get current technology and equipment. Small Industries Development Bank of India set up on 2nd April 1990 under an act of Indian Parliament. Acts as the principal financial institution for promotion, financing and development of micro, small and medium enterprise sector as well as for coordination of functions of institution engaged in a similar activities. Okay, so see the next one. The name is National Bank for Agriculture and Rural Development, popularly known as NABARD. People can resort to NABARD for any type of financial support for rural, handicraft, village and agricultural development. Right? Which type of financial support they provide? To the rural, handicraft, village and agricultural development. It is an apex institution for financing agricultural and rural sector. NABARD provides both short-term and long-term credit through regional rural banks, that is RRB. It is concerned with policy planning and operations related to agriculture credit and credit for other activities in rural areas. It provides finance to financial institutions and not to the individuals. Don't forget that. Now, till now we understood 9 types of banks. Now see, there are some new modes of banking, and in this we will see the 2 types of banks. The first one is small finance banks. The aim behind these banks is to provide financial inclusion to sections of the economy not being served by other banks such as small business units, small and marginal farmers, micro and small industries and unorganized sectors, etc. Existing non-banking financial companies, microfinance institutions and local area banks can apply to become small finance banks. Right? Who can apply? Non-banking financial companies, microfinance institutions and local area bank can apply to become small finance banks. Small finance banks are a type of niche banks in India. These banks are with a small finance bank license and provide basic banking service of acceptance of deposits and lending. These banks can be promoted either by individuals, corporates, trusts or societies. They are established as public limited companies in the private sector under the Companies Act 1956. They are governed by the provision of Reserve Bank of India Act 1934, Banking Resolution Act 1949. There are no territory restrictions for these banks. They were set up with the twin objectives of providing an institutional mechanism for promoting rural and semi-urban savings and for providing credit for viable economic activities in the local areas. Examples, we can say that Jana Small Finance Bank AU Small Finance Bank, etc. Objectives of small finance banks are provision of saving for unserved and underserved section of the population and supply of credit to small business units, small and marginal farmers, micro and small industries and other unorganized sectors. Okay, now let's see the second bank, that is payment bank. It is a new mode of banking. It is conceptualized by the Reserve Bank of India. The main aim is to offer financial services to small businesses and low income public. It is like any other bank as it can carry out most of the banking functions such as remittance services, mobile banking, ATM cards, net banking, etc. But it is not allowed to issue loans and credits and credit cards. Similarly, it can accept the demand deposits only up to 1 lakh. Okay, they can accept the demand deposits only up to 1 lakh rupees. Some of the examples of active payment banks to the date are Indian Post Payment Bank, Airtel Payment Bank, Paytm Payment Banks, etc. Now we understood all 9 types of banks and also the new modes of banking. Let's have a quick recap. We studied 9 types of banks, that is central bank, commercial banks, cooperative bank, development bank, exchange banks, regional rural bank, saving bank, investment bank and some specialized banks and some new modes of banking, that is small finance banks and payment banks. Hope you understood all. In next lecture, we will discuss functions of commercial banks. Okay, functions of commercial banks. Thank you for watching today's lecture attentively.